And they had 2.5 billion raised on the $1.8 billion hole. They were good.
Yeah.
Until Mr. Thiel and the PayPal mafia said, take your fucking money out. $42 billion in one day.
Yeah.
No bank survives that.
No.
None. Zero. No. There is no bank, right? You think your money's safe in a bank? Bullshit. If there is a bank run, you're not safe.
The bank crisis and failures of 2023 had significant implications for the financial sector and the broader economy. Banks borrowed a record-breaking amount from the Federal Reserve, indicating financial stress and the need for liquidity. This situation could reflect a lack of confidence and potential solvency concerns within the banking system. One implication of the crisis is the potential risk of a credit crunch. As banks face difficulties, there is a risk of rating downgrades, defaults on loans and corporate bonds, and a broader deterioration in credit conditions. This could lead to a negative feedback loop where declining credit quality and reduced lending exacerbate economic challenges. The implication of bank failures extends beyond the immediate financial sector. A crisis of this nature can have spillover effects on the broader economy, affecting consumer and business confidence, investment decisions, and overall economic growth. It may also prompt policymakers to implement regulatory reforms aimed at strengthening the resilience and stability of the financial system. Mark Yusko, an investor, has been vocal about his insights into the banking crisis. Mark Yusko's views on the bank crisis shed light on factors such as systemic risks, regulatory issues, economic conditions, or other factors contributing to the turmoil in the banking industry. His analysis offers a unique perspective and provide insights into the broader implications of the crisis. To gain a comprehensive understanding of Mark Yusko's insights and opinions on the bank crisis, it is recommended to watch this video till the end. Before we listen to him, please smash the like button and subscribe to the channel if you are yet to do so. Please also share this video to your friends and family that would benefit from the information. Thanks for watching our videos.
There's a video going around now, this one's spooky, of the Senate Banking and Finance Committee talking about bail-ins. Right? What's a bail-in? A bail-in is where they seize depositors' money. And the way they talk about it is, well, we have to create like turmoil so they don't notice it. Michael, you're on video. Like this is recorded. And we are not that far away from Cyprus, 2012, where you woke up and 3/4 of your money was gone. So I'm not saying it's going to happen tomorrow.
Yeah.
It's the fact that people are talking about it. That's a spooky thing. Look, we have a system since 1913 that has fomented the creation of an elite class. And until somebody stands up to it, it's not going to end. The problem is the people that could stand up to it are owned. And I mean that term intentionally, by the elite class, because it cost $100 million to become a senator. No one that I know has $100 million to blow becoming a senator, so they got to get it from the elite class. And you want to go on a really fun Google search tonight? Go down the rabbit hole of Mr. Thiel's relationship to the Koch family. You'll love this one. We haven't had many periods in history, right? We had one in the 1930s that led to the debacle of the 40s. We had one in the 1860s in the UK. You'd have to go back into the probably late or mid 1700s before that. So it doesn't happen very often where the interest burden exceeds the capacity of the said, empire to pay. And what it necessitates is a complete reset.
Navigating the amazing offers of the cryptocurrency industry can be a daunting task for beginners or even professionals with busy schedules. Fortunately, there are several tools that can make the journey into crypto investing seamless, lucrative, and convenient. One such tool I am very excited about is JJO, a platform designed to help beginners and professionals invest in specially created cryptocurrency indices in minutes. By investing in a cryptocurrency index, you're buying a whole set of leading assets and eliminating the risk of losing money by buying only one of two crypto assets. Whether it's in stocks, cryptocurrencies, or other financial instruments, indices have been proven over time to outperform even the best traders. That's why legendary investors like Warren Buffett swear by this simple yet brilliant approach. With JJO, you can create your own indices and portfolios or choose one of the available ones to begin investing like a pro in minutes. Beginners especially appreciate JJO because it allows them to conveniently invest in the future of finance without any technical abilities or know-how. Plus, JJO presents no safety concerns for users. The service does not accept money in your accounts. All funds are in the user's exchange and the portfolio is managed via the API keys. JJO service is absolutely free for small amounts below $500 and is available in over 200 countries, with 12 language options. Please click the link in the description box below to access these exciting benefits. Registration is by invitation only, so hurry and click the link to get started. Go sign up right now.
Of the said, empire to pay. And what it necessitates is a complete reset, like literally a jubilee. And again, it's what the UK did in the 1860s. It's kind of what we did the 40s, kind of. I mean, it was a little bit offset by the massive expenditures for the war. Which that's another one, a topic for another day is, linking the periodicity of wars to economic contractions. But this one's different, to your point, in that increase in interest is, and even though it's a terrible chart crime, right? Because they start at, whatever. But horrible chart crime. But it is a big increase. And we're getting close to a level of the budget that we've never seen, not even in the 30s. And at some point, we'll run out of people to tax, and we'll run out of missiles to send into the desert to pump up GDP so we can increase corporate taxes. And so what's left? Default. Well, we ain't going to default. So, all the tweets of Joe Biden's going to default on it. No, he's not. No, we're not going to default on the debt. Now, will we devalue it? Will we deflate it away? Will we print so much money that, QE comes back and that those charts flip again? Yeah, that's what's going to happen, because it has to happen. Look at the balance sheets of all these banks. They were going crazy. Well, then what happened when they raised rates? Boom. Unrealized losses. Shit. What do we do now? We bury our head in the sand and pretend it's not there. Yeah. Well, okay, what if there's withdrawals? Well, shit, now we got to sell some bonds, which is what happened to SVB. And look, Silvergate Bank taken down for crypto and because the guy was a bad guy. Signature Bank, Crypto Bank. Well, not really Crypto Bank, but you're Crypto Bank. You're bad. Silicon Valley Bank, that wasn't crypto. Right? That was all caught in the Warren crypto. Yeah. That wasn't crypto. That was shit. Withdrawals. Because why? Because people woke up and said, I can make 5% in a money market. And so you had this massive inflow to money market accounts, dwarfed inflows to anything else in the mutual fund industry. And it was coming out of banks. And what you'll see, and I have it in my presentation later, is First Republic and some others, Signature Bank, tried too late to raise their CD rates to 5% to try to stem the outflow, but it was too late. And then the teal thing caused the flywheel to come off. And so somebody has to buy the bonds. And it's going to be the lender of last resort again. So QE will come back. Or, this is what I've talked about this for decades. It could be that they pass a law that makes it the law that you buy bonds in your 401k. That could be.
The banking failures and crisis in 2023 have been attributed to various factors. One major factor contributing to the bank failures and crisis is the occurrence of bank runs. Bank runs happen when depositors rush to withdraw their funds from a bank due to concerns about its financial stability. In the case of the 2023 crisis, a major lender to the tech industry experienced a classic bank run, leading to its failure. This highlights the vulnerability of banks when faced with mass withdrawals. Additionally, the possibility of a global credit crunch is the potential next phase of the crisis. A credit crunch refers to a situation where the availability of credit becomes restricted, making it harder for individuals and businesses to borrow money. Such constraints on credit can have a ripple effect on the overall financial system, potentially leading to further bank failures and a broader financial crisis. Regulatory issues and central bank interventions also play a significant role in addressing the crisis. Regulators and central banks have been taking measures to prevent a widespread financial crisis. The actions and policies implemented by these institutions aim to stabilize the banking sector and restore confidence in the financial system. While the exact causes of individual bank failures may vary, the overall combination of bank runs, the possibility of a credit crunch, and the need for regulatory intervention collectively contribute to the banking failures and crisis observed in 2023. What do you make of Mark Yusko's interview, and do you think we would be seeing more bank collapse in 2023? Let us know your opinion in the comment section below. Thanks for watching.